everybody, Mike DeSepoli, Heritage Financial Advisory. Welcome to Heritage Insider Weekly for Friday, May 22nd, 2026, the Memorial Day edition of Heritage Insider Weekly. Hope you're all having a great week. Back to update you on the markets and the economy. A lot of things going on in the markets this week. A couple big important earnings reports, some economic data, and continued developments in the trends in the market. So we're here to update you on all the things that matter and give you the items that you need to focus on as we move into the holiday weekend. Let's start with some of the big news of the week, where you can see the headlines here. Dow Jones jumps 300 points towards a record, towards another record, along with, as well as the S&P and the Nasdaq continuing to push higher into record territories as we see Treasury yields, bond yields, that is, start to ease off a little bit as we hear more talks about a potential peace agreement with Iran. Now, caveat there is we have heard this, type of news headline probably 20 times already, and it has yet to produce anything of substance. So it remains to be seen if this is just another one of those things. But you can see that markets kind of taking an optimistic approach to this as we move into the holiday weekend. The other big news of the week was the much anticipated earnings report from one of our beloved companies, NVIDIA. Just a phenomenal earnings report, beating on earnings estimates, beating on revenue estimates, giving higher than expected guidance. In addition, they announced an $80 billion share buyback, and they also increased the dividend from 1 cent per share to 25 cents per share. So that's just a huge return there to shareholders, really giving back to shareholders, return of capital. So just a phenomenal report all around, and you would think, with given all those good things, the stock must have went up, straight up, right? And obviously that was not the case. We've seen a trend with NVIDIA really over the last 8 quarters now, so it's about 2 years, where their numbers come out and they're just phenomenal numbers, and it's almost like the market is just like so confused with how good these numbers are that the market really doesn't know what to do with these numbers. And so the trend with NVIDIA tends to see, kind of some flatness, maybe a little bit of selling after the earnings report. We think the narrative there is like, hey, maybe this is as good as it gets, right? But we don't believe that to be the case. We think NVIDIA will resume its uptrend in the weeks and months ahead as it makes its way towards $300 per share and beyond, currently around $216. So a lot of upside there, but I think the numbers are just so remarkable. When you break down the revenue that they're guiding for, they're estimating that they're going to do about $90 billion for the upcoming quarter. I mean, folks, that's $1 billion a day. That's $1 billion a day when you annualize it. So just remarkable results. And one thing to note about NVIDIA, as the stock price has climbed over the last number of years, the growth of earnings and revenue have actually outpaced the stock's ascent. So as it sits here today, NVIDIA, from a price to earnings ratio metric, which is how many people measure stocks, is actually cheaper here in the 200s than it was last year or 2 years ago or 3 years ago. So the story for NVIDIA is far from over. There's a ton of upside. Great earnings call from Jensen Huang, just talking about the opportunity that's in front of them, where demand just far exceeds the supply that they can bring online. And it could be this way, in his words, maybe for a decade. So just remarkable stuff from NVIDIA, but nonetheless, right, market reactions to earnings reports are really not something to take too much stock into. Sometimes stocks, report great profits and they go down the day or two after. Sometimes stocks lose money and they go up. So I wouldn't read too much into the reaction. We still think that the path for NVIDIA is much higher once some of the short-term digestion works itself out. Let's take a look at the S&P 500 here together. Markets continue to press onwards after a little bit of a pullback, right? Last week we talked about in the video, which was done before market open last Friday, there was a very large derivatives and options expiration last week, which is the third Friday of every month, and that tends to create a little bit of a hiccup for the market, a little bit of a heartburn, as there's a lot of these derivatives contracts coming off the books, so it creates volatility in the market. And so that's what we got. We got a pullback last Friday, Monday, and Tuesday, and now markets continuing to press onward and upward into the end of this week. We'll see if we get that new all-time closing high today, later on, when the markets close around 4 p.m., but we're pretty close. Markets looking great, continuing to move right up towards our intermediate term mid-year target of 8,000 plus or minus. I think it'll be on the plus side, not the minus side. Probably an overshoot, if anything, with the high end of that range being somewhere around 83 to 8,500. Again, looks great as far as the trends under the hood of the market as well. We're seeing broad participation in this rally. It is not just being led by a handful of tech stocks. If anything, when you look at stocks like NVIDIA that we just mentioned, and Microsoft, and Meta, and Apple, many of these stocks are either just getting back to their all-time highs or still have some room below that. Even throw Tesla into that group. And so these are large market cap weighted stocks that are big parts of the market indexes. And so when these stocks really fire up, which we expect that they will, it's really going to add a substantial tailwind to the market to continue to push things higher. Also, one thing in the next couple weeks, we will likely see the SpaceX IPO. Now, IPOs, while they tend to be, exciting and there's a lot of fanfare around them, they are a source of needed capital in the market, right? And so the SpaceX IPO, which is projected to be around $2 trillion, is, I think, the largest IPO in recorded history. And so you have to think about when something that large comes into the market, it's going to suck capital from other areas of the market. It's just a natural function of the way markets work. And so we could see a little bit of turbulence around that IPO as investment managers sell other things to try to allocate money into what's already an oversubscribed IPO. But I think the markets have enough buying power in them that they'll be able to work through it in a number of days, and markets should continue higher. So all in all, everything looks good here. We'll see over the weekend. It is a 3-day weekend, no market trading on Monday, with the Memorial Day holiday. So we'll see if there's any additional news or developments with Iran, which the market would welcome that, obviously. Let's take a look at today being the last day of Jerome Powell's term at the Fed. Thank the good Lord. Even though market returns have not been that bad under him, which you can see here on your screen, it's been a very challenging environment. He's dealt with a lot of different things, the inflation of 2022 post-COVID, and some kind of missteps, if you will, with policy. But all in all, he had a pretty good performance. You see 96% returns aggregate over his term, puts him kind of right, a little bit above the median here with Fed chairs, and well behind some of the higher performance seen under Greenspan and Volcker. But overall, we're looking forward to the change here. Kevin Warsh, we think, the Fed could use a breath of fresh air, and Powell will be moving out of that role at the end of the day today. Also, some interesting jobs data that we saw. There's a lot of noise around the jobs market, a lot of noise around the jobs data, but one thing that we found interesting was the job switching data spiked in the month of April, and job switching speaks to the options available to people in the jobs market. So it's actually a good indicator that people are seeing opportunities to switch maybe to a better job, a higher paying job, that there's demand for their services. And so we tend to see, this type of activity or this type of job switching probability lend itself to, better jobs data in the months ahead. So we'll see if that continues to be the case. Also, as the Dow presses back above 50,000, we thought, this was from our friends at Carson, good time to remind people that politics and investing do not mix. Investing strategies should have nothing to do with politics. We know how noisy politics are. We know the world has a lot of things going on right now that has people uneasy. But you can see markets will continue to do what markets do, which is respond to fundamentals that are financial in nature, okay? And markets go up over time under Democrats, under Republicans, under independents, you name it, markets will trend higher if the economic underpinnings remain strong. So we saw this chart floating around from Carson. We thought it was worth sharing, And we think that, whoever comes next in the White House, if the Democrats regain power, if the Republicans stay in power, whatever happens in the midterms, it is not something that should be affecting portfolio strategy, as you can see here going back to 1900. Let's take a look at our institutional investors survey. Wow, look at that. A huge jump in bearishness as the market presses all-time highs. Folks, I feel like a broken record, but I could not ask for a better circumstance with this data where you have a scenario where the markets are hitting their all-time highs and this large swath of institutional investors are bearish. What are these folks so scared about? I do not know, but I am very happy that they are as scared as they are. This suggests that there is a lot more available upside in this market than many folks are giving credit to or giving credit for. So that's a wonderful reading. Retreat in bullishness, a jump in bearishness, and all we did was get 3 days of a pullback, right, from the all-time highs to create this type of change in sentiment. Let's take a look at next week, our U.S. news and economic reports. Where is our next week's report? Here we go. No market activity on Monday. We know that, right? Memorial Day holiday. Then we'll get the home price index on Tuesday. Jobless claims on Thursday. And then GDP will be an important one on Friday. Get a good idea of how the economy is doing. The growth of the overall economy last month came in at 2% GDP. So we want to see if the trend will come in above that. That'll be important to see that, if the impacts of higher fuel prices and some inflationary pressures, whether or not they're having any negative impact on overall economic growth. But all in all, markets look great here, continuing to press onwards. I believe we're moving into our target in the near future, right on schedule as we expected. And the individual stock environment continues to be very supportive of higher prices. So if you have any questions, of course, reach out to us. We're always here to talk to you about anything that matters with your money. We hope you have a great day and a great weekend and a happy Memorial Day. And we'll see you next week for Heritage Insider Weekly.